Welcome to Trading Lounge and the gold silver report for the 17th of March. On the weekly chart here, as you know, we're looking for a low in here, but I'm still tracking two counts. One is that we have a low in place and we're working trades to the upside on that and with silver as well. But we need to be mindful that there can also be a corrective rally here and then another move down here before settling for that low. So we just need to be diligent on that. With that in mind, let's go in and take a closer look. So just on this one here, this is the pattern for the low here in terms of wave 3 here with a WXY. You could also trade that, label that as an ABC pattern as well, like on our website. So yeah, looking at it from this perspective, we're looking at the first move here as wave 1, back for wave 2 here, and then starting to build up into wave 3 here. So let's go in and take a closer look at that. But I think we also need to be mindful of the bearish side here for this. So let's just actually let me just go back out, just check on the daily chart here, just a bit clearer of a pattern, that's all. So in this case here, there's a couple of different ways we could count this here as well, but from this wave B here, 1 and 2 and 1 and 2 and 1 and 2 and 3, 4, 5 for the third wave, fourth wave coming into where this line is here around the 1750 and then moving down from that point. So that 1750 there, we'd really want to see that as support in due course. So yeah, there we go. So you know, it still can be finished. This is just as valid, I believe. So we just need to be careful about that. And let's go in and take a closer look on the 1 hour chart and work it up from the bottom there, as we have been doing. So just being mindful that in this case here, we're looking at this as wave 1 and 2 here, but also wave A and B and a C wave for that wave 4 there as well. Okay, so we just need to be a bit careful about that. But yeah, so let's just go into the actually, before we go to the tick chart, we'll just have a look at the US dollar index. So this is a 4 hour chart here for that, and just bring the date in there. So from this wave 3 low here to this wave 4 here, then we're looking for wave 5 to the downside here to complete that wave C off through here for that. In that case here, we're looking at the move up here with 1, 2, 3, 4, 5 for the A wave here, then the A, the B, and the C, and the D, and the E here for wave B, and that leaves us with 1 and 2 here, and 3, 4, and 5 here for the C wave of wave A. Very clear A, B, C pattern here for the B wave, and then 1 and 2 here, and 3 and 4 here. So yeah, unless, as I mentioned before, we would need to get a very clear breach through this line through here for that top to be in play here at the moment. But otherwise, we'll look at this as wave 3 here, wave 1 here, and wave 2 here, and an ABC down here for wave 4. And we need to see wave 5 move to the upside. So we're looking for another move to the upside here before seeing further downside here from wave B to wave C here in 5 waves of 1 and 2 and 3 and 4 and 5 here. If I'm wrong about this and the dollar's going to be more bullish from here, well, once we count 5 waves up here, any move above or past that 5 waves, then we'll need to revisit the wave count. But for the time being, I'll just stay with what we have here for this. So while this is moving up here, it may put pressure on the on certain products like gold, but we will see. This wave 2 here hasn't really pulled back to the 50-60% retracement level in this instance here, so I'm just going to take that from there. So that's okay, that's all still there. So it can pull back down from this point, so we just need to be mindful of that. So that can be in there somewhere. Let's go into the tick chart here where we've been basically working this market from. I'll just go back to the beginning a bit here, if I can fit that in. So from the low here, we've been looking at this as 1 and 2 and 3 and 4 and 5 here for wave 1. It could also be the A wave as well, so we need to be diligent. Wave 2 here for that, and then we've been counting up here for this. And it seems to be quite stuck here, doesn't it, at the 1730. So the 1700, and then we've got 1, 2 and 3, 10, 20 and 30, which is group 1. And yeah, so far as I can see it so far is that we'd have wave 1 here with an A and a B and a C here for this. I'm just checking to see. No, we can have one more move down from here because I can see we've got 1 and 2 and 3 and 4 and 5 for 1 here and 2 here, and then 1, 2, 3, 4, 5. So we've only got the third wave here. So it looks quite complicated here as an A and a B and a C wave here for wave 4. So yeah, we can come down another notch here for this. So just let's just get this right. Going to take it from the top of wave 1 and not the top of wave B. That said, it does look like 5 waves up to this one. So that's 1 and 2 in here, then 1, 2, 3, 4, 5 for 1 and, sorry, 1 and 2, and then 1, 2, 3, 4, 5 for the third wave, fourth wave and fifth wave. So that is actually 5 waves up here for that. That could be counted a couple of different ways in here, but A, B, C back here. So it could be bullish. Have I missed something in here? What have I missed? I haven't missed anything in that leg, I understand that. What have I missed over here? I mean, all of this is a bit rough, starting from the low down here for this. I just think we should be careful of one more move down here because it's just ending in 3 waves here. Is that lower than that? That would help. No, it's higher than that. If it was lower than this one here, then it would be okay because otherwise we have to look at this as wave 1, but it's just not in 5 waves here. I don't see 5 waves here. I see that in 3 waves. I see an A and a B and a C wave here that's not finished. But this wave 4 here is rather large compared to this little wave 2 in here, so that's a real problem. If you're not long at the moment, let's just say that you're not long, then to be long above the 1735 would be okay to do it at that time, at that point. But I think we just need to be a little bit mindful that we could get one more move down here first. And if that is the case, then if we go back below this level here again, then you would need to, if let's just say that you want to add to the position or you're not in the market at the moment, if like a big if that the market comes down for this 1, 2, 3, 4, 5 here, then you have to wait for the first high above the level again to go in. So it would be over this side here, or even that one, whatever. And if the market just moves straight up from here, then look at then I'm wrong, and then you need to be long at that point. So it would need to be long above the above 35 there. Okay. Look for that same pattern here on the 5 here. There'll definitely be some correction here because of what's occurred over here before. But just be mindful of that little move down here. Alrighty, let's have a look at at silver. So I know there's a bearish case for this, but as long as we're looking at, as long as we're looking at the positive side for gold, we may as well stay on the positive side here, because we're above the closest largest number, which is 25, which is a medium level, which is halfway between two major levels. So that's why we're there. And you can see that's a really nice balance line for that. If, however, the market drops under the $25 mark, then we need to look at the bearish side. So we've been looking at this as wave 1 top here with an A wave, a B wave and a C wave here for this. And then we're trying to build a case for the bullish side here. We've done that since the low here for this. So like gold, we can look at this as 1 and 2 here. And we can also look at this here as 1 and 2 here as well. I'm not saying this is the correct count, by the way. We're just working it from the low. That's all, So just on the 1 hour chart here with this. So we've got this first high above the level, and then we've got the second high here as well. So that would be the safe trade at that point, okay? It just depends on how much risk you want to take on. So what price point is that? That's 572, 580. So we're in subgroup 2 here, which is 80, 65, 25, 65, 72 and 80. So that would be the support there. In this case here, you could probably bring that down to here for that. So I don't know, like I've mentioned many times, I don't know if we've got the low in place for this, but it's just that we're working the long side because we're above the $25. That's all. Okay, and let's just go to the tick chart. I don't know if we're going to learn much more from it at this point, but we'll check it out anyway. We've been looking there. So we've got wave 1 up here, back for wave 2, and then we've been counting to the upside here. And in counting to the upside here, well, hindsight, wave A here, wave B here, and then 1 and 2 and 3, and probably 4 here, or some sort of A, B, C, D, E here for wave 4, and down for wave 5 here. So I'm not quite sure if we've got the low here on this yet, but if you're going to go long here, it looks a little bit impulsive up through here, that's good. But we need to get on top of that 26 now to finish, if, let's just say, if we get support on the top of the 26, like a nice tested support, like trading above it is not support. It's got to come back and check it and then take the previous high out. So that's why we look at the classic trading levels pattern. It's just helps. There's more to it than this, of course. But this is just keeping things simple. So, once that high gets taken out here, that means that in the market depth, the buyers have come in and secured that and have overridden the sellers of that at that point. The buyers are in control at that point, taking that move out through here. So at the moment we don't have that. So getting any spikes above here is, the breakout's important, but it's not everything. Every move is important because it's part of the picture, part of the puzzle. So let's just see how this goes here. I mean, obviously, if it drops below the 61.8% here, this area becomes the retested resistance, then we're in trouble at that point. Then we'll see further downside at that point. Yeah, if you're long at the moment, either in this trend or this trend, then you'll need to we're just keeping the stop out of the way. Nothing's changed on that note. The idea too, if let's just say that we get support this time around, that means that we've got wave 2 here, so we're moving into wave 3, and also with this 2 here would also be moving into wave 3 as well, so we'd be in the third of the third at that point. So what you're looking for in a nutshell is this wave 1 coming into play here, and wave 2 coming into play, and that will be the third of the third of the third, and this is where it will really take off at this point. So what we could say is that building in long here would be good. Building in on top of 10 as a tested support as well. You have to drill in there and get that, and on here as well, and then on the 30 here. If the 30 becomes the support with a classic trading levels pattern, then that will take us straight to the 50, and that will take us above these highs here. We could also look to add on top of the 50 as well. You know, we have to build in at the beginning of the trend. So all we've been doing is, I don't know if this is correct, but if it is, then this is the place to build in here, because it'll be the third of the third of the third coming into play at that point. And, you know, it's the old story, you know, in taking, this is the top here, we can go long from that point, we can go long from that point, and now we're trying to refine it and move in through, you know, trying to refine this here. But the whole thing could fail and just, like I mentioned, just continue down through here, like with, you know, with the other with that bearish pattern on gold. So nothing's confirmed yet, but certainly taking out these highs here would be a step forward in that. Alrighty, thanks for tuning in. Appreciate it. Cheers.